the main point of my talk actually is to amend that to include silver this time.
Special coverage of the Deutsche Goldmesse is brought to you by Victoria Gold Corp. Hello and welcome back to Soar Financially, here from the floor of the Deutsche Goldmesse in Frankfurt. My name is Kai Hoffman. I'm the JR Mining guy on Twitter and the CEO of the Soar Financial Group. Thank you so much for joining us here. We have an in-person discussion. I'm really looking forward to it. Lobo Tiggre is joining us here on the floor. Lobo, thank you so much for coming out to Frankfurt. Really appreciate you being here.
Happy to be back.
Absolutely, it's great to have you. It's like you were a great keynote last time, and you have yet to speak this afternoon. So really looking forward to this conversation, because last time it was standing room only, and looking forward to what you have to share with us. But we missed our regular, now almost regular, since we've done it twice. It's of course regular.
Our new tradition.
Our new tradition is the Fed Week live interview we've done. Last time we had over 800 people in the live room, which was absolutely fantastic. But why don't we start there? Maybe we should start recapping a bit the week, and maybe some of the comments that Jerome Powell shared with the market. What were your impressions?
Well, it's kind of interesting in that we also, to provide a fuller context, we had the jobs report after Fed Day, 2 days after Fed Day. And Powell has said that on certain key economic data that he will get it the day before. So we do know that the Fed has access before official release to, CPI and key things. But this was 2 days before, and I wondered, did he know what the jobs report was going to come out, that it was going to be a big miss? So as we record now, we have that. I don't know if we'll ever know that, but it's interesting because, what we got was in a way a big nothing burger. The Fed did nothing as expected, but Powell was largely expected to be much more hawkish than he came across in his press conference. As these things so often have been, it's less about the FOMC decision than about what he says afterwards. And if he goes off script, or if somebody asks a question and he doesn't stick to the talking points or something. So yeah, he was, the big surprise, as it were, was that he didn't, come across as, oh yeah, cuts or anything like that. But he had this opportunity to come across as much more hawkish, to try to sound, more tough on inflation, and he didn't really deliver that. That was the surprise. That was the big move in the markets. If you saw, on Wednesday, things didn't move so much on the FOMC release. They moved when Powell's jawbone started moving, right? as usual. So it makes me wonder if he knew what was coming on Friday with the jobs report. But we'll never know. Here, for me, the takeaways, dear audience, are, you can't quite call it stagflation yet, but it seems to me that my long-standing call for that, it's headed in that direction. You got a much weaker jobs report. Not only was it expected to be weaker, but weaker than expected, right? And you had, the inflation prints that we've had, CPI and PCE coming in hotter than expected. And to give credit where due, it's Jeff Gundlach who likes to highlight this, how, last year the Fed they kept trying to cut off, never mind the core numbers, right? Now we have super core. We're going to cut off everything that everybody actually needs on a daily basis, right? Shelter and everything. But if you look at those super core numbers, they don't talk about anymore. Well, they're up. Powell says, oh yeah, well, inflation, we're on our way. It's less than 3%. Well, not if you look at the number he said was more important last year. The super core PCE is 4.1, is it CPI is 4.1, and the PCE is over 3. So this isn't the 1970s all over again, but it's starting to look like it's going to rhyme, and I think that's the direction we're headed. And the labor markets, sorry, I'm getting way ahead of ourselves on the macro here.
Yeah.
Just to labor markets, in my mind, it's like a dam. And you can look at it and you say, oh, it's just a little crack, it's not a big deal. But, with the dam, it's not like one crack, two cracks. It's not a linear progression. You get crack, 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 and then boom. And so if we're seeing cracks in the labor market, which has long been, I think you and I have spoken about this one-legged pillar that the U.S. economy is balanced on, this strong labor consumer, if that's cracking, this could be the sign of the dam about to go.
Well, 3.9% unemployment rate, still below 4. Still, I think sounds like full employment to me. Don't get me wrong. Like 3.9%.
Record low levels, but it's in the wrong direction. And again, this is the Gundlach indicator. He likes to track the long-term unemployment rate versus the spot, if you will, the current number. And that has not just a long-standing, but it has an unbroken record of, I think it's the 3-year that he uses versus the spot. And so when the long-term average crosses with, or the unemployment rate bops up and it crosses the long-term average, in 100% of all past cases, that has been a recessionary indicator. Like 100%, doesn't fail. We are basically there right now. With this last jobs report, the lines don't actually touch. But the current unemployment rate is actually higher now. Because of the one is ahead of the other, they haven't actually crossed. But the current unemployment rate at 3.9 is higher than the 3-year average. So the values have crossed, if not the actual lines on the chart. I think it's pretty much baked in the cake for next week. So all these people who've been saying, if the long and variable lags haven't shown up by now, they're not going to. The Gundlach indicator says they're wrong.
Yeah. Interesting. I haven't had a chance because we were at the conference here yesterday when the jobs report came out. I think that the forecast number was 270,000. The actual was 190-ish something.
No, 175.
175. Okay. Yeah. Did you have a chance to take a look, like where the jobs were created? Because I remember looking a couple months ago, it was pretty much all government jobs.
Yes. So this was interesting because there were only, I think, 8K government jobs, and so if for whatever reason the government decided everything was fine, they didn't need to hire so many people.
So the IRS hiring is over.
Right. Something like that. Yeah, I can't tell you why that happened. But if the government had hired as many people as in the previous month, then the jobs report would have come out on target.
Okay. So they let the foot off the gas. I'm curious because we always try to interpret something into it, what that means. And for
election year, the administration, who knows? Maybe they got complacent and they didn't think they needed to intervene as much.
Maybe it was just also like I mentioned the IRS. I think they announced at the end of last year that they're going to hire 70 or 80,000 new employees.
Right, but the Republicans pushed back on that. I don't know exactly.
I don't know where we stand on that. So I'm just trying to come up with
the latest headline I saw on that, though, is that they are saying that they are about to do a major push on audits. Yeah. Like they have a new shit list, if you will, sorry, of people that are going to go after tax cheats, and they're about to do this major onslaught. We'll see.
Let's try predicting a little bit next Fed moves as well. Like you mentioned,
I love making predictions.
I know. But like moving into, like we're coming closer and closer to the election, so I do have to ask you. Like the Fed is not trying to be political, but it is becoming a consideration. It has to be at least discussed. We'll see the Fed minutes in a few weeks, I guess. See if that ever gets mentioned. It hasn't been so far.
It's a shame we didn't get a new dot plot, and of course they have a schedule for that, because it would have been interesting to see if there's still 3 dots. Yeah. So as of, and again, this is the kind of thing where Powell could have said in the conference, well, the dot plot wouldn't look the same now as it did then, but he didn't. So officially, there's still 3 dots for this year, or rather 3 cuts based on the dot plot for this year. And there's, with the meetings left, there's no way that doesn't coincide with the election if they actually do that. Now the market's not pricing 3 cuts at all.
No,
they're
down
pricing
to 1.
Right. Down to 1. And it had been pushed off all the way to December, and now it's been brought forward. And I haven't looked since the jobs report. It might actually could even be 2 back on the table. I haven't seen the latest numbers on that. But the market is saying not 3 cuts and much later, which actually puts it after the election. If it's November, December, that's after the election. Would the Fed, there's no actual rule that says that if they do something ahead of the election that will necessarily be seen as, they could say, well, look, this was the right thing to do, and we ignored the election. No. So it's
like
kind of
it's all about
spin.
the symbolicism, I think, as well. Like a quarter point or 25 basis point cut is not going to do anything.
Yes, right. Yeah, it's not going to change the outcome of the election.
No.
Right. So
it's more about the symbolicism behind it.
Yeah.
Like why are we cutting rates? Is the economy really faltering? Right? So especially given we're still, and you mentioned earlier, in a rising inflation environment. So, and Jerome Powell, like based on what I've seen on Twitter as well, just keeps ruling out rate hikes.
Right. Yes.
But he talks about inflation being like not the data not being what they expect to be.
The last time it was a bump on the road, right?
Yeah. He used bumpy like 10 times in that.
And now it's interesting that that didn't raise more shockwaves than you might think, because it went from it's just a bump on the road, it doesn't matter, to now basically, without saying so, he's admitted they've made another transitory mistake. That bump on the road, what does that mean? It means transitory, right? And now it's stickier than they thought. He said, this, in my mind, this was one of the most striking points about this last bout of Fed speak was, the latest data means we do not have that confidence we need. The latest data does not give us the confidence we need to say we're on the sustainable path to 2%. So that is a significant rollback of Fed speak. It's just a bump on the road to now we don't have this. We need to see this confidence and we don't have it. So that you could say the election interference, if there is any, is that he's not talking hikes. Like in that context of we don't have this confidence that we say we need. And inflation is being stubbornly higher, not just for 1 month or 2 months, but 3 months. Yeah, right. So they should be talking hikes, and they're not. Maybe that's the election interference, if you want some, ahead of the election.
No, that's juicy, right? Because the question is, what does that mean? Like we'll talk about markets in a second as well. But a rate hike, like how is he going to tame inflation?
Right.
Like he will have to hike at some point because the market is completely ignoring the 5.25% interest rate. It seems like housing is not coming down, which was always seen as a main indicator.
If you're really asking how do you tame inflation, there's, they have a limited set of tools. They always say, we got the tools, we can fix these problems. But they really have a very limited set of tools. And we have seen that the tools have not worked as well as they should have. I mean, we saw a record rate of tightening. And, they were bigger magnitude rate increase moves under Volcker than under Powell, but Volcker didn't start from zero. So I think that objectively, really, the Powell rate hikes blow away anything Volcker did. And the suddenness, the magnitude starting from zero, it was really for the record books. And yet we don't have this massive wave. He hasn't visibly caused that recession that Volcker did, and that Reagan said okay to, right? Though behind the doors we understand that Reagan really wasn't very happy about the recession. So policy isn't working the way it's supposed to. And the fact that inflation, as reported, has come down from 9% to 3% apparently has very little to do with the rate hiking. Because the way the rate hikes are supposed to work is they're supposed to slam the brakes on the economy. They're supposed to get people fired. They're supposed to get businesses shut down. And that's supposed to bring prices down. But the firing and the shutdowns, we've seen some of it, but not, at least as the government measures it, right, as much as we're supposed to. We still have historically low, even at 3.9, we still have historically low unemployment. So that the inflation rate has come down from 9 to 3 isn't because he got everybody fired, as the harsh medicine is supposed to be. It's because of something else. Now, the new explanation is, well, the supply chains were broken, that sent prices up. The supply chains are fixed now, so the prices have come down. I mean, that makes some sense. I'm sure that's partially part of what's going on. But if so, that has nothing to do with his rate hikes.
Those are external factors, exactly.
So how does the Fed control inflation? Well, it looks like they're not really in control of it at all. It's doing what it's doing despite the Fed, which, to give again credit where due, this tags into something Lynn Alden has been saying, if you've interviewed her.
I'm actually interviewing her in a couple of weeks, I believe, as well. So
she talks about fiscal dominance, right? And so it's the fiscal policy, stupid, that's running the show here more than the Fed. And that's interesting because we think about all the stimmy checks and the grossly misnamed IRA and all these things that were done during the lockdown era, and we think, that's a couple years ago the government spent all this money. Well, no. They approved, right? And to make appropriations even is part of the process. And then when the checks actually get into the economy, when the shovels hit dirt for these construction projects and things, that's actually starting to happen now. So the fiscal pig. I'll admit I made this mistake. There was all this stuff happened or started and it was making headlines 2-3 years ago, and so you'd think that fiscal pig is well through the python. But
stealing Adam Taggart's line there.
Is it?
I think he's using that in his interviews.
Oh, sorry.
No, it makes a lot of sense.
The pig
it's
going
a great,
through the python
it's a great.
I think of it as Le Petit Prince, right?
Yeah.
You know, the
Oh, okay.
elephant
Yeah.
in the. Anyway, so the mistake that I and others have made, I think, is thinking that that pig was well into the python, but it's still going in. Like the python is still chomping that thing down. The money is still going in. Fiscal dominance.
Lobo, like the U.S. recently sanctioned Russian uranium imports again. And I'm curious, you went bullish again on uranium, I saw on Twitter. The question is how bullish and what is the impact of those sanctions?
Well, I never returned bearish on uranium, I have to say.
You took a pause. You took a step back.
I called for a correction.
Absolutely. Fair enough.
Here, in fact,
Yeah.
in Deutsche Goldmesse. And I was right. But boy, did I take heat from that. Uranium bulls did not want to hear that at all. Anything but it's going to the moon was not acceptable. And lo and behold, we have the correction. So before we'll get to the ban, but just so for the record, right? I'm as bullish as ever. You know, corrections are normal. I see this correction as an opportunity, especially for anybody who missed it last year. There, you know, if anything, we need a little bit more correction. Some of the obvious winners in the space, they're so obvious winners that they haven't corrected that much, right? So as a buyer, I'd like to see a bit more. But kind of like we were just talking about with gold, if gold corrects to 2,200, that's a fantastic price for the miners. Uranium is corrected and it's in the 80 to 90 range. If it stays there all year, that's a fantastic price. These, you know, the high price assumptions were like 70, 75. And the better ones were much. So for the actual business of uranium mining, we don't actually need higher prices, but I think we'll get them. The ban, first, it hasn't actually become law yet. The news is that the Senate passed their version. So now it goes to conference. And so the actual language that will land on the president's desk is not set yet. So it's a little bit premature to say this is what it will or won't do.
And maybe to clarify also for myself, are we talking refined uranium or
see, that's
pure
the
uranium?
thing. That's
so
the thing. I haven't read the bill in the Senate, so I can't tell you. Somebody did post on my Twitter what looked to be language from the bill that included language about LEU, low enriched uranium. And I haven't had a chance, I've been traveling, I haven't had a chance to verify that. But if that's true, if it includes LEU, that is a big deal. If it's just a ban on U3O8, on the mine product of uranium, it's symbolic. Because we don't really...
Because you don't import that.
We don't import that, right? Or the US doesn't
barely,
anyway, right? It's symbolic. But if it includes enriched uranium, that is a big deal. Because that is, Russia's one of the big suppliers there. You know, Orono says they can ramp up and they can replace Russian production by 2029 or maybe 2026 if we hurry. But that doesn't help us now, right? So, and utilities have stockpiles too, but they don't like to get them below a certain level. And again, it's the enriched uranium that goes into the pellets, that goes into the fuel rods. It's closer to the actual thing that goes into a reactor. The utilities can fool around with spot uranium and the stuff the miners are doing. That's farther down the fuel cycle. But this is closer to home, so it's the sort of thing that they would need to react to. So, sorry, I don't have, you know, here's the answer, here's what's going to happen, Kai. We need to see what final language comes into the bill that lands on the president's desk, and I think he will sign it, there's no question in my mind about that. But we need to know if that final language does include any enriched product, because that has a much bigger impact. You know, does that mean that U.S. uranium producers and or developers or explorers will then all go up? Logically, it really shouldn't. Long-term pricing is really where that's at. But when is Mr. Market,
it's just sentiment.
Yes, right. So I think it will have an impact. I think it is bullish for not just U.S., but U.S. and close friends, you know, Australia and Canada. Those companies will likely benefit.
Okay. No, I appreciate you putting some context around that. I was just trying to make sense of it for myself as well, so it makes sense. No, I appreciate that. Let's talk about your presentation at the conference. We're not giving anything away because we'll be putting this out after you're talking later this afternoon. What is something you want the investors to take away, and what are some of the highlights?
Well, the main thing is, we've talked about some of it, you know, the unknown buyer, you know, it's hard to predict the course of an unknown whale that's in the market, right? That sort of thing. I was only here last November, so it's not so long. I said gold was my highest conviction trade for 2024. the main point of my talk actually is to amend that to include silver this time. And as you recall, the uranium bulls hated me for calling for correction. The silver bulls call me all kinds of names, Darth Silver, all this stuff for pointing out silver's greater industrial side. But we've seen really since about the time I was here last year that silver has started acting differently in the marketplace. It is sort of remembered that it is a monetary metal, and it has been trading much more closely with gold than it has been over the last years. There's been more and more coincidence with copper and oil. Like silver, the lines on the charts will look more like copper and oil in recent years than gold.
We talked about that, I think. It was flat while gold was moving up, silver was flat or even dropping.
Or just look at the flash crash of 2020. Everything sells off, gold and silver included, and then as soon as the liquidity crunch passes, gold comes screaming back up again, but silver goes sideways and did so for a year. And gold has continued to hit nominal, at least all-time high after high. Silver has yet to hit a new high, even on a nominal basis, right? So I think that's not just an opinion or a Loboism or a Darth Silverism. I mean, that's just the data. It shows that silver is not acting the way it has before in the marketplace. And people can say it's manipulation or whatever you want to say, but whatever the reason for it is, it's still not acting the way it did before. What I'm saying, and this is important because it changes what I'm going to speculate on. And what I'm saying is that we're seeing silver act ever since the Hamas-Israel conflict flared up. We're seeing silver act much more like gold.
It's actually outperformed gold a little bit, not by much, but I think percentage-wise, like 20 to 30%.
And that's what the classic thing that we want from silver. Gold moves 1%, silver moves 4%. That's classic. That's what we want to see. And so what I'm saying is that's like silver's got its mojo back, its monetary mojo back. And so I've modified my marching orders for this year. So it's not just that gold is my highest conviction trade this year, it's gold and silver. Which may not sound like much, if you're a gold bug, gold, silver, we like them, But for me, it is different, and it does change which stocks I'll buy, right? Because before, it would have been, there are silver stocks that don't have much gold in them. A lot
many.
Right. Well, no, I mean a lot of silver. Basically, there is no such thing as a silver mine. No. Right? It's either a lead mine with a lot of, or a lead zinc mine with a lot of silver in it. The single largest source of silver in the world is the big copper porphyries, and gold often comes with silver. So when we say it's a silver mine, we mean that the highest value, not volume, but value coming out of this mine is silver. But the most metal is almost always something else. So it does matter. It's something that the value primarily was silver. I would have been interested, but I would have said, well, let's see what impact the recession has on silver before we go there. And now I'm saying I'm not going to wait for the recession before I start buying silver stocks. Silver stocks are back on my shopping list right now.
Okay. Fantastic. Lobo, that's going to be exciting. I've already, afterwards,
you know what the headline's going to be.
I've pictured a meme in my head. You know that bar meme where people stand in front of a bar and then the screen changes and either somebody scores a goal, but 30 people jump up and scream and shout? I'm going to have you quote that piece, silver's back on the list, and the bar is going to go on. If I have the time on Monday or Tuesday, I'll put that meme out. I promise that.
All right.
But that's really insightful. Lobo, where can we find more of your work?
I might lose my Darth Silver mantle there. No, I'm sure I still get it. IndependentSpeculator.com. Thank you for giving me the opportunity. Dear audience, there's a free weekly letter. If you sign up, I promise we won't spam you with ads every day.
Fantastic. Lobo, thank you so much for coming out to Frankfurt again. It's a huge, huge pleasure. Thanks for coming.
Thank you.
Everybody else, I hope you enjoyed this conversation. I missed our live interviews. We need to do this again. I really enjoyed them.
Next Fed Day.
Absolutely. I need to look up the date. I don't have it top of my head. Must be June 18th or something. It feels like. Really enjoyed that. If you like this conversation, hit that like and subscribe button. Leave a comment. Leave a like. What do you feel about silver? We've been joking about it, but I think it is, and allow me to say that, it's almost like a gimme, that setup for silver right now. If you're following it, it's a bit of a layup. What do you call it? A layup, a prediction.
Well, let me put it this way: limited downside.
Yes.
Because that industrial side, the
that
solar panels, the industrial demand. Let's say I'm wrong about the recession and gold underperforms. I actually see silver as the win-win here. Like if there's recession and scare, monetary demand, silver goes up. If Powell kisses the boo-boo, everything is fine, it's a reflationary boom, the industrial demand holds silver up.
Exactly. Fantastic. Awesome. Follow Lobo as well. Thank you so much. Fantastic Twitter presence as well.
At Due Diligence Guy.
Fantastic. Awesome. Thank you so much for tuning in. We'll be back with lots more here from Frankfurt.